The share market hits a 10-month low. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of HeiseSays. I thought today we'd start the weekend off by having a look at this article written by James Hall from news.com.au about the share market suffering, well, a heavy loss again. It's hitting a 10-month low. Let's jump over to one of my favorite websites, Trading Economics. We can have a look at the ASX 200 to get an appreciation of... There you go. There you go. It ain't doing too well, is it? Not at all. So let's jump back and have a look at this. The Australian share market has tumbled again, falling to a 10-month low as experts warn the worst is yet to come. Ooh, so how are people hedging for this? Are they going into precious metals? Are they going into property? Does this mean that the market is overvalued? What are people doing about their super? Some people in the comments said they pulled their money out of shares and put it into cash in their super. I'll admit I did that for a portion of ours. Let us know in the comments what you're doing if you're worried about these type of things. So the Australian share market was hammered yet again as the misery and volatility attributed to the deadly virus weighs on global markets. Following heavy falls on Wall Street and Europe overnight, the local market closed 2.8% lower at 6,216 points, tumbling to a 10-month low. During today's trading, the banks were particularly hard hit, with 3 of the big 4 hitting multi-year lows. Now that's a big issue here in Australia because they make up a big chunk of our share market, guys. It's kind of embarrassing for Australia, you know? Pretty much a bank-run nation with a few quarries, as Kata would call it, on Sky News, and some shopping centre, shopping duopoly. The sell-off comes as credit ratings agency S&P said Australia, along with Hong Kong, Japan, Korea, Singapore and Thailand, will enter or flirt with recession, according to the Australian Financial Review. Well, I can't say I'm going to be surprised that Australia will enter recession. I think it's inevitable at this stage. I don't think anything the government can do to address it. I think people overestimate. They get too emotionally involved in what they think the influence the politicians can have. Sure, they can have influence, but usually they stuff it up more than anything. They get in the way of the market. They prop up dying businesses so long, and we all have to pay for it, that there isn't any room for new innovation to flourish. But, it's too emotive, too hard, really. Markets, both here and abroad, have been fluctuating wildly recently, clinging to updates of the deadly illness and the slashing of Australian and US interest rates. The ASX rose 280 points over 2 sessions after the Reserve Bank of Australia, Governor Philip Lowe, cut interest rates to historic lows of 0.5% on Tuesday. We can see it here. So, and an amateur observer would be forgiven for dismissing the latest slump as just another rise and fall. I don't know, that looks pretty drastic. We've lost months of growth very sharply. Very sharply. But CMC Chief Market Strategist Michael McCarthy says these erratic movements are significant and concerning. It tells you that we don't know what's going on, and that's the big issue for the market at the moment, he told news.com.au. It's just the uncertainty of the economic impact. We get optimistic about potential central bank support and financial stimulus from government, then we see another closure or border shut, and the sell-off comes. Well, yes, this is the problem. The market is all based on emotion, hype, hope. Hope. Why do you think all these unicorn businesses that don't make a bloody cent are so valued so high? It's just the latest internet bubble, I guess, when pets.com was worth a fortune. Thumbs up if you remember that. That uncertainty means the volatility is likely to continue, and unfortunately, The longer it lasts, the more economic damage is done, and the more likely we'll see lower levels on the Australian share market. Mr. McCarthy said whatever gains come from the fluctuations will likely be met with further losses. The fact that the market rose so hard this week was not a good sign. Markets that are this volatile means we haven't yet found a balance, he said. So is this his way of saying we haven't bottomed out yet? We haven't bottomed out yet. I mean, gold has reached all-time highs. Or not all-time highs, but it's pushing up. Even, I think, Bitcoin. Let's have a look at that. Coin market cap. Well, I know my Kucoin shares have gone up. What's Bitcoin at? We'll have a look. There you go, $9,121 US. So it's heading to 10,000 again. So what does that all tell you? People getting out of traditional assets. Shares on Wall Street fell sharply overnight as fears intensified after the number of cases confirmed in the US rose to 164 and California declared a state of emergency. The Aussie dollar was buying 65.98 US cents, down from 66.28 as the market closed on Thursday. I guess that's at least better than the 64 cents we saw. Well, the US cut their interest rates, didn't they? So investment opportunities. The market slide comes just weeks after the ASX 200 was at all-time highs, which should present profitable options for mum and dad investors, unless they've lost or they've bought at all-time highs. Berman Chief Investment Officer Julia Lee says it's important to remember volatility is normal for stock markets. Yes, but not this. This happens. This drastic change. Look at that. Even then, 18, it wasn't that steep. Look at 5 years. Let's go to 10 years. 2011. 2010. We've got all time. It's just, there you go. There's the last time it happened. Or this is the beginning of that, doesn't it? It seems very similar to 08, the GFC. It really does. Berman Chief Investment Officer. I said, remember, volatility was important as the market. Yes, but these are very drastic. The market's going all over the place right now. What we've seen in the past is it is an opportunity for long-term investors who can keep their cool, she told news.com.au. But the problem is, we don't know how long this is going to go for. My best case scenario is that we start to see better news flow coming through by April. Really. When we see falls of more than 2% in one session, it can be quite scary, but it's also quite normal. I went back 11 years and crunched all the time. The Aussie market had fallen more than 2%, and on average, it's about 7 times a year. Yes, but we're getting more than that. We're getting back on back 2%. Just look at it at this scale. I guess. I mean, you need to have there will be some opportunities here, but we'll have to see. About 6 or 8 weeks after it started, my strategy is to slowly start accumulating stock. So there we have it, guys. There we have it. Australia's, the risk of recession here at Australia is essentially sending the market down. It's all emotionally driven. So Australia, Hong Kong, Japan, Korea, Singapore, and Thailand are at risk of recession. What do you think would happen? What do you think will happen to our housing market? What do you think will happen to the commercial property market? What do you think will happen to the banking sector? What do you think will happen to the unemployment rate, guys? What more can they do with the cash rate to stimulate the economy? Is this even going to work? Is it? I'm so concerned with things are going. I want to buy a new computer game. And I go to Rachel, no, we'll wait. We'll wait till that invoice comes in from that new client. I'll wait a couple of months. You never know what's going to happen. We're cutting back on, $20 discretionary spending just in case, because we're that worried where things are going to head. What are you doing? Guys, let us know in the comments. Thank you all for watching, everyone. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can share the content, get the videos out there, help the channel grow. You can use our affiliate links at Amazon or eBay for your consumer purchases, or Kucoin or Independent Reserve for the crypto traders out there. We also have merchandise we sell from the HeiseSays website, pocket squares made by Rachel, and PayPal if you want to contribute that way. Finally, you can join the channel here on YouTube as a channel member, get access to badges and emojis, or on Patreon and get recognition. Thanks for all your help, guys. Have a great day and enjoy your weekend. Bye for now.